Hello everyone, welcome to Bearable Kingdom, and once again it's Bearable King doing analysis real time and sharing it with you like he's always done. Alright, I hope August has been fair to you. I've heard and I've also observed that August has been wicked for a lot of traders. But nonetheless, for those who listened to me when I said that August is not really a good time to trade, not because you can't make money, but the market could be funny sometimes, The Bible says something in Ecclesiastes 3, there's a time to give and there's a time to take. Well, this is the time when the market has to take back from traders. A lot of traders who do not understand the market. Now, I'm not here to argue that some may be profitable. I'm just saying that while some are profitable, a whole lot are not profitable. I've been unavailable for a while because I had to take out some time to do some personal reviews. It's the middle of the year. Check what I'm doing right, check what I could improve, check what I could do better, and see how to move forward from here. So here are one of the choices I have made for myself. I have decided to reduce the number of pairs I'm looking at from gold, AU, GU to mainly just gold. I could post top to bottom analysis for GU once in a while and for EU once in a while, but I really wouldn't be looking at them because in the last 6 months or 7 months reviewing my books, those pairs didn't really pay me as much as gold did, if you understand what I mean. So what I'm trying to do now is to just focus on what would pay me, and I encourage you to also take time to review yourself as well. Okay, alright, fantastic. Please, if you've not subscribed, please do so. Click on the subscribe button so that you can get real-time updates from us whenever we're posting something new. Alright, so let's go quickly into the charts as discussed previously. So this is our monthly chart. I actually found a platform that has the chart as far back as 1833. So this was the price as at 1833. That was about $15. Gold has really come a long way if you ask me. So as you can see, from inception till now, gold has never been as high as it has been, which tells you one thing, that gold is one of the surest commodities in the market. It's one commodity or one asset that everybody buys and they know that, okay, yes, I am definitely going to make money in the long run. So let's take an example. Someone bought gold in 2001 at around 290. Currently is running at like $1,900, which is roughly about 900% of whatever the person bought it for. But that's not our business here. Since we're trading CFD, which is actually a derivative, which means that we're trading the value of that commodity, let's focus on what we're here to do. So I'm here today just to do a quick top to bottom for those that are following me, for those that are interested in what I do. I'm not going to be posting as frequently as before for the simple reason that I don't want to keep repeating what I've already said before or things that you already know. I want to focus on things that would make impact on you and how you trade the market. Okay, so right now, as you can see, gold is in an upward movement, right? Because it has broken this high 1, 2, and this is the third time. And I said I expect this third time to be the charm, meaning that I'm expecting the market to move from here upwards. Okay, in my last analysis, I mentioned that the only time I'll be reconsidering a movement to this downside is if the price should break below this point. This is my point of invalidation. Now, why did I say this? I said this because here, the first point, we had like an evening star setup showing a rejection. Here we had a shooting star with a bearish sorry, with a bearish engulfing candlestick. Then after that we had a bullish engulfing candlestick. We pushed the price up and we had a bullish confirmation that the price has broken this level. So this pullback tells me that this price may most likely not cross below this point. If it does, then there is a possibility that this price may do this, pull back and do what? Come down here. And if it does that, then we'll expect it to do what? Go up. Okay. So overall, on the monthly time frame, the market is still what? The market is still bullish. However, right now, it is highly possible that this price could, from here, somewhere around here, let me say maybe drop a bit, move up like this, come back to retest this point and do what? Move upwards. Okay. I won't be able to explain that on the higher time frame, but what I'm going to do is I'll explain what I'm looking at on this time frame. Now, if you're conversant with the Fibonacci extensions, you know that retracement tells an extension level. So all I'm just going to do is I'm applying my Fibonacci here, right? And what happened? The price came down to the 70.5 pip level with a nice morning star setup here, right? A nice morning star setup confirming the bullish push. And after we had that, we also had here, we had head shoulder pattern. All right. And what happened? The market moved up to this point. Okay. Let me take that out. So right now, since we have the market retraced to this point, the extension point is somewhere around here. So right now, before this move will end, I'm expecting it to get to $2,434 per ounce on the monthly time frame. This is the monthly time frame. Now, I'm not sure how soon this price is going to get here, but I'm expecting that this price is most likely going to get here pretty sooner, or more surer that it's going to get here than coming all the way down below $1,000 per ounce. Alright. Okay, so we're expecting a bullish move on the daily time frame, right? On the daily time frame. Okay, so on the monthly time frame, sorry. Now I'm going to move to the weekly time frame. Now, if you've been with me for a while, you know that I've already marked this point, this area of interest. We have been ranging for a while. We've been ranging for a while. So this is June 2020. The price pushed up, came down here, came up here, tested it, came down here. Now this down part, it gave a W formation, double bottom formation, right? And after that, the price has pushed up here. Before this price pushed up here, it made an internal movement, which was 1, 2, now we have 3, right? And the price is now somewhere around here. Okay, now mind you, this is more of an impulsive move, so we're expecting that the price will do what? Pull up to somewhere around here, around these zones, either here or here. Now another thing I want to do right now is I want to consider the length, the distance in terms of pip. So from here to here is roughly about 3,384 or 3,438 pips, right? The next distance is from here to here, which is roughly 2,622 pips. 2,622 pips. I'm not counting the last figure because that would be points instead. Yeah, DB, no. Alright, so what I'm doing right now is I'm applying the laws. Okay, All right. So what I'm looking at right here is I'm looking at the market right here. We had an internal move, which is the market moved from here to here, then came down here, now came up here, did this, pulled back, and now it's here. So from somewhere around here, I'm expecting that the price will do what? Move up. And the upward movement I'm expecting is for the market to at least get to this point, which is 2060, or come up to this actual point, which is the take profit point, 2131. So this is what I'm expecting for this chart. Okay. Alright. Okay, I hope you're with me. Hope you don't mind the slow song. It's actually 2:15 a.m. and I'm just cooling my mind, and I thought, okay, let me just do this video to upload for those who have been wondering, okay, what's Bearbull King doing? We've not heard from him, we've not seen him, what are we expecting from him? So this is what I'm looking out for. And if you're not on my Telegram group, please send me a comment and I'll send you the link to the Telegram group. Okay. So what am I looking at right now? I'm expecting that this market is going to reverse between 1860, 1858 and 1887, which is where the price is right now. So what am I saying? Right now for this week, alright, I don't want to just speak because I'm speaking. I want to show you what I'm expecting. Okay, let me zoom in a bit. Fantastic. Alright, I believe this is clear enough. Okay, so we've had the first move, we've had a pullback, and we've had a higher high, which tells us that the price is going up. So how high is the price going to go? Alright, I apply my Fibonacci. This is my Fibonacci right here, from the high to the low. Right, let me put this here. Okay, let me put this here, move the take profits to the right point. Okay, now I'm going to give you the top to bottom analysis of what I'm expecting. So in the coming weeks, say within the next 1-2 weeks, I'm anticipating that the price should stay within this range. Okay, I'm expecting that the price should stay within this range, which is between 8,000. Hold on, let me. Here. So let me take this off. Let me take this off. Alright. So between 1,881 and 1,857, I'm expecting the market to give us a form of rejection and then give us an upward move. So if the price should reject around 1,881, I'm expecting it to come up to 2,172.75. And if the price should reject 1,855, I'm expecting it to come up to 2,138. Okay, 38 as it is there. Okay, let me change this to white. So I'm expecting a movement like this. Alright, this is what I'm expecting on the weekly time frame. Okay, but if you're going to trade this, you need to go to a lower time frame to get your confirmation. But this is what I'm expecting. Okay, now note something for sure. One, we cannot control the market. What we do is we trade along with the market. let's say for example this price comes below this point, right? Then what I can expect is I can expect the market to come back to retest this point, and if this price gets broken, then we can expect it to go lower. All right, but pending the time it does that, this place still remains very valid and very intact. So for now, my expectation is still bullish, meaning that within the next 2, 3, 4 weeks we should see a nice rejection to what? The upper side here. Okay, so let me take this off. Let me take this off as well. All right, now on the daily time frame, right? On the daily time frame, initially what I was expecting was a movement to the upside here, right? A movement to the upside here. I was expecting a head and shoulder pattern, meaning that we had this here, come down here, come up here, come down here, and then come up here, then pull back, and then come up to this point. So a break above this point would have taken us to the upper side. But guess what? So what happened was somewhere around here, you can see that the price got rejected with this engulfing bearish candle. Then what happened? The price broke below. Immediately as the price broke below, the price retested this point, and from here what happened? The market started selling. So immediately it started selling, I just hands off gold and I kept watching gold. I'm sure if you're in my Telegram channel, I mentioned it somewhere around here that if it breaks below, you will be selling, but on the 4-hour time frame. I'm still going to look at that. So right now, since this head and shoulder has been truncated, which is the reason why most of the time if you're going to trade head and shoulders, they'll tell you that you should wait for the break of the neckline. So a lot of people will look at this and say, oh, head and shoulder does not work, head and shoulder does not work. The head and shoulder setup did not completely form. That's the reason why it didn't work here. If it broke above this point, then we would have comfortably taken a nice buy from here to this previous high, which I must tell you would have been good profits, right? Okay. Alright, so right now the market has been trickling down, and look at these candlesticks here. The market just kept melting off like butter. It kept melting off. Now I've marked this place as the last high before this push. You know, when the market came down, it gave a W setup right here. It gave a W setup right here. What am I talking about? So see this, the market dropped here, right, pulled up a bit, came down here, pulled up here, came down here, pulled up, and immediately pulled up. What happened? The market just ran all the way up. There was no room for retests. Okay, so what we may be experiencing now may be the market's opportunity to actually come and retest this point, okay, before doing what? Continuing the upward movement. Okay, continuing the upward movement. Now if you look at this area, this is 1859, which is possibly close to the 79 pip level on the weekly time frame, right? 79 pip level on the weekly time frame, which tells us that from here we may see the market actually start flying up. Okay, so let's be looking for buy opportunities around, if this level does not hold, 1888.87 does not hold, then we should be looking for another buy around 1860, 857 level. Okay, now I'm going to a lower time frame, which is the 4-hour time frame, right? Yeah, so this was it here. We were expecting the market to move up. So what happened? The market started dropping, and then from here the market became crazy. I remember this market, we were in it for days, waiting for the market to buy, only for the market to sell out. man, it was messed up that period. Okay, so I marked this point and I said that time, for those who followed me, I mentioned it then. I marked here and I marked this point, and I said that we're expecting two things: either the market will break up and wait for a pullback and buy, or we're expecting the market to do what? Break below, come back here and then sell. And sold the market did. So for anybody who took advantage of the market around here and kept on selling, they would have made roughly about 400 pips from the market, which is actually enough money for anybody in the month. Okay, in a month, a lot of people do so much more with so much less. All right, now aside from coming this low, the market has broken this level. Initially, on the 4-hour time frame on my page, I asked the question, I mentioned something, and I said, if this high actually held here, right, you can see the market rejected it here, 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 here. If I drag it properly, say somewhere here, right, so the market rejected it here, right, rejected it here, rejected it here, rejected it here, rejected it here, and here as well. We makes it a strong resistance zone. Now I was asking that would this level hold? Well, right now this level is not really holding, and the reason why it's not really holding is because the market broke below and the candlestick is forming below this level. All right, but if we were to take it to say maybe down weekly or more or daily, there may still be a chance that this market may move up, right? But we don't know when this market is going to move up. So what we will do is we will be observing it, right? And what are we observing it for? We're observing this trend line, this downward trend line. Let me take this off. Seems a bit distracting. So right now we're observing this downward trend line. We want to know what the market is doing around here. And to be honest with you, the best way we can trade is wait for confirmation. And what confirmation are we waiting for? We're waiting for one, a break of this trend line to the upper side, a creation of a higher high, then we'll wait for the market to create a higher low before we take a buy to the long side. Okay, so right now what this candlestick has been forming are rejections. As you can see, the market has been rejecting these levels, right? Rejecting these levels, and it has been coming downwards. So for now, the market is still moving downwards. I told you that August was going to be crazy. This is August 1st. So from August 1st till now, gold has been bleeding out crazily. Now let's move to the 1 hour time frame. Now what I did on the 1 hour time frame was I marked the support levels. Alright, fantastic. So this was the first move, August 1. As you can see, the market dripped down, bounced off this level, broke it, came up to retest this point, dripped a bit, broke it, came up to retest this point, broke it, came down here, came up, retested this point, dripped a bit, came up a bit, then did what? Broke it here. This one ruined a bit, came up here a bit, came up here a bit, broke it, came down here, broke it, and is now down here. Right, so as you can see, overall the market is giving us like a staircase to hell. Wow, the market is just dripping and the market is just falling. What am I expecting from this market right now? Okay, so I've actually marked this area and I've said, oh, this is the 70 fib level. Let's go to the weekly time frame, right? Let's go to the weekly time frame. And on the weekly time frame, let's apply our Fibonacci as we mentioned earlier. What I'm going to do right now is I'm going to put lines on those areas of interest, right? So I'm going to put this here, and I'm going to put this here, and I'm also going to put it, no, let me delete this first because I want to label it. Okay, area of interest. Okay, fantastic. And I'm going to put it on 75 time frame as well. Alright, so that's what we have, right? Okay, so this is what we have. So let me go back to the 1 hour time frame. Okay, right. Alright, so we have two levels here, right, on the chart, and these are the levels that are of interest to me because they are key levels on the weekly time frame. So what am I looking at right now? Two things can happen, right? We may have the market push up a bit, say to this point, right, and then drip here, and then push up to somewhere here, you know, then maybe come back to somewhere around here and move upwards. Or we could have the market come up here and then break below this level, then come here, and then, you know, come down till it gets to this point before the upward movement. Okay, so for now, if you'd ask me, what I would say is wait to see what the market will do around here, or somewhere around here. You want to see the market, two things, either come down here, then push up like this, then pull back here, then buy, right? So your buy will be somewhere around here. Or you want to see the market pull up somewhere around here, fall down here, pull up here, then you look for opportunities to do what? To sell to the lower part. Okay, so you have two options here right now, right? We'll be looking for what the market will be doing. Will the market first push up for a pullback to this area? Then if we get a rejection, we can sell to a new low. Or will the market hunt this area of interest and then from here push up? But remember, you'd want to leave out this first 1122 move and then buy either here or look for a sell here, confirming that the market is going to give you like 200 extra pips, or from here you can keep on buying for long. Okay, now there's something I'm going to share as a secret about gold before I end this video. Alright, so as you can see right here, this market did what? This market has been ranging for a while, has been ranging to the downside for a while, right? I can actually take this trend line and put it somewhere here, right? I could put it here, right? Now as you can see, the market has been ranging to the downside for a while. Okay, so here right now, if the market does not come down to this point and breaks up, then we can expect a major move. We can expect the market to move from here probably to this first top and continue going higher. So once this move starts, what we'll just be doing for the rest of the year will be to buy gold. Alright, okay, so this is what I have for now. I'm not sure if I'm going to do GU because right now GU is not really looking interesting. EU is boring the shit out of me for now, so I'm going to leave EU. But let's see what the market is going to do. Just mark this out on your chart and simply follow the market. Okay, Till next time, I remain your favorite host, the Bearable King. Do have a lovely weekend and enjoy the rest of August. Remember, September we're going to start trading heavy. November, September, October, November, December. It should be a good period to actually make so much more when the market starts moving to the upper side. Okay. All right. Bye bye.